Hi guys, welcome back to the channel. Today I'm doing a small educational video about the way I use channel tools, Fib tools, linear fibs and versus logarithmic fibs, why I personally prefer the linear ones, and how that essentially also affects the indicators that I built, because they're all based on linear. Yeah, so a bit of my reasoning behind it and that kind of stuff. Now, I'm not claiming this to be the best way to do things, although I personally like them more than other systems that I've tried. And, you know, each trader has their own style, so take it for what you will. You know, I'm just sharing my ideas, and for those of you that might be interested. Right, in front of me here I have a little list of topics that I want to cover, and yeah, I'll just dive right into it. I'll cover them section by section and then show you on the chart what I mean by these things, right? So first things first, why I don't like the channel tool. So the levels, you cannot customize them. The mid-range lines, they don't change color automatically when you change the color of the channel. It gets unanchored when switching between lin and log, and that's kind of the reason why I only use it for like quick and dirty eyeball TA. That's not really, I use it just for like, you know, highlighting some stuff, but not necessarily as part of my trading strategy. Right, so let's look at the chart and show you what I mean, right? So we have channel tools versus Fib tools, linear versus logarithmic. We're on the Sol Bitcoin chart on the daily time frame right now. And let's just apply a regular channel tool, right? So we have a channel tool and we say we want to highlight this diagonal channel here, right? Now, first off, what I said is if I select this channel and it's right now it's black, but I want to turn it, I don't know, orange, it turns orange, but the middle line doesn't, right? I have to go into the settings and specifically set the middle line to orange as well, right? I don't know why this is. I think it's retarded, but anyway, maybe hopefully in the future this will change, right? So that's one of the gripes I have with it. But the biggest gripe I have with it is I have a perfectly healthy channel right here. Right now we're on the linear chart, and watch what happens to this line here when I switch to logarithmic, right? You can see that it's now completely unanchored, right? It no longer represents the channel that I was looking for. I have to now manually adjust it to where it was, right? Now it's aligned again. And if I switch back to linear, there we go. And now the line doesn't line up with the wick anymore. Now I have to readjust it again, right? It's fucking annoying. So that's basically the main reasons why I do not like the channel tool and why I prefer to use the Fib tools, right? So yeah, and in terms of the settings, there's really not much there. You can extend them and you can have like a bit of a background, but that's about it. And yeah, you can add some text. Well, great. All right. So yeah, that's why I don't like the channel tool. So let's come back here. Why I think the Fib tools are actually awesome, right? So first of all, they never get unanchored, and I'll show you in a sec. So the positioning on the chart stays consistent between linear and log. The levels can be customized. Prices can be shown for the levels. And the only minor downside is that all the lines are either dashed or solid, so you can't mix and match them. But that can be circumvented by just using two Fib tools with the same position to simulate the look of a channel tool. If that's really something that your brain is, you know, used to seeing as a channel, where you have the solid lines on the outside and then the dashed lines on the inside, you can still simulate the look just by using two Fib tools at the same time. And clever use of Fib tool level structure also allows you to create like cool effects like background bands and stuff, right? So let's cover these things. We'll do the same thing, but we'll do it this time with the Fib channel tool, right? It's this one. You can find it here in your drawing panel, right? It's on the third row next to the Fib retracement. You have the Fib extension, Fib channel, right? This one and this one are the two ones that I mainly use. You can see them here. I favorited them, right? Let's hide this so we have more real estate. Right. And what you'll notice is that the Fib channel tool, if we do the same thing, let me just, I forgot to hide these because I was testing some stuff. We do need one. There we go. So since we're here anyway, you can now see in the settings, you can add a whole bunch of levels and, you know, play around with them and do all kinds of stuff. You can mix and match different colors together. But if you take this color and just, you know, pick one, they all change, right? Everything at once from here as well, right? I can just turn this whole thing orange in one click. There we go, right? No fucking bullshit that I have to go in and change them one by one individually, right? If you want to simulate the channel, all you need is the 0, the 0.5, and the 1, right? Let's turn these back to black. Right, so now you have a channel, right? So, like I said, the only gripe is that you don't have the dashed line in the middle, right? But we can fix that if we want to. So, look how they're anchored, right, on the wicks. If I now change between linear and log, it doesn't change, right? It's still anchored in the same position, right? Let me just lock it to make sure, right? I'm not messing around with it, see? And while the middle line does change position slightly, it's much better than having this thing unanchor and be like floating in the middle of nowhere, right? Right, cool. What else? Yeah, so you can add all the levels that you want. Positioning on the chart stays consistent. Minor downside is the dashed lines. And yeah. So clever Fib structure. Let me show you. We're gonna hide the 0.5, right? Because we want that one to be dashed. So we have a dashed version of the same fib. And voila, now we have what looks like a regular channel tool. But not only that, since we are allowed to add more levels, we can actually add the 25% and the 75% and also divide these two ranges into halves, right? So instead of being a retarded pleb doing this, like I have this channel, right? And then I want to see the midpoint of the other channel, you could technically do this by hand by trying to line up this one with the middle range of the other one to create that, right? You don't have to do that stuff. Plus, if you go back again like to linear, all this fucking shit gets distorted, right? It's annoying. So we just don't use this stupid tool. It's useless. We use this one. We have one channel. It's properly anchored, right? And we can add all the levels that we want, right? And then let me change this one to the solid one, so it's like how I use it, right? There we go. All right, so now we have a much more interesting channel with a bunch of extra levels that are very handy. And the trick that I also sometimes use is the bands. Right? We line it up again. And here what you'll see is that we suddenly have two colored bands, right? And the trick on how to do that is, well, now it's gonna there we go, right? Is because the Fib tools, they use the color structure in this way, right? From left to right and then down, from left, right, down, left, right, down, left, right, down, right? In a zigzag downwards, right? That's the order in which they align the color gradients of regular Fib, right? If we draw a regular Fibonacci tool, apply default drawing, right? This is what your regular Fib tool looks like, right? All these colors, if you check here, right? The way they overlap is based on how you organize all these colors here, right? In that zigzag structure that I showed, right? So you can take advantage of that, put the higher number below, and then put the other number that you want above it, and then put that same number with the same color as your background color, right? If I take this away, you'll see that it fills in that space with that gradient, right? That's just a little trick I use. It's not super important, but it's nifty, right? It's handy for some occasions if you want to like make it look pretty or whatever. Right, so that pretty much covers the difference between why I prefer the Fib tool over the channel tool. And we're going to go over some basics of Fib tools, right? The channel and the regular range, Fib range tool. So the third decimal points of the levels are pointless. The second decimals that are close to the first decimals are also pointless, right? So your 0.1, 0.9, that kind of stuff. They work both in lin and log simultaneously, and the channel tool does not, which I already covered. And the way I use it is if I draw a range or a channel that I'm gonna use for like a longer period that I'm also gonna be checking on different time frames, I'll tend to use wicks because it's it means that the range stays consistent across all the time frames. And for specific occasions, I'll then use candle bodies for local time frames, right? And I'll show what that means, right? So let's go over the decimals and why they're pointless. And right, so we're gonna zoom out a bit and we're gonna take something like this, right? So we take a range, solid, there we go. I'm gonna draw it from the top. Ah, come on. To the bottom. Then what I'm gonna do is just as an example, right? I'm just gonna add the 0.706, right? This is a famous kind of line that ICT crowd people use and all that kind of stuff. And I'm just gonna add the 0.7, right? It's literally the same line. Like you're talking about a difference of what, in this case, barely over 200 sats, right? Why are you using this retarded fucking number if you can just round it off? It doesn't make any sense, right? There's literally no difference in like how you're gonna detect stuff, right? And I hate to break it to you, but the same goes for your 618, right? This is so close to 0.62, right? Why are you, like, it doesn't make any sense to me. It's just, why, right? Just because it's a Fibonacci number or whatever, like I don't care, right? It's the same line. I'll just use a simpler number instead of this fucking like weird ass shit, right? And yes, I know that I have other numbers here and I'll explain why, right? So, like I said, take this with a grain of salt. This is just my opinion, but yeah. I still use them because I'm like OCD and stuff, basically. But not because I'm like married to them. There's logic as to why I use this number. These two numbers actually happen to be 1/16, right? So if we take 50%, 75% is the half point between 50 and 100, right? If we divide it again, you get 0.875, right? It's the half between this and this, right? And if we then add 0.9375, it's exactly the midpoint between this one and this one, right? So let's do that again. We divide the range in half, so now you have two halves. We divide it in halves again, so now we have a quarter range, right, of the entire thing, or half of the upper range. We then divide it again, you now have 1/8 of the range, right? So 1, 2, 3, 4 in 1/2 times 2 is the entire range. And then if you divide it again, 0.9375, which gives you the midpoint of the upper quarter of the upper half, it gives you 1/16 of a range, right? That's why I use those numbers, right? Because it's the exact 1/16 of a range, right? And for those that are familiar with my work, you know that 16 is 4 times 4, and yeah, you know why I use it. Right, so that's basically the reasoning as to, or like how I use the tools, basically. So let's kind of dive in into how I actually apply them to the chart, right? So if you're to draw a diagonal line, how do you decide where you draw it, right? And that's kind of like one of the gripes most traders have with diagonals, and the reason why they don't like them is because they're very subjective, right? Because I see a diagonal here between this point and this point, but it doesn't necessarily line up with this one here, right? But if I line it up with this one here, then yeah, it's, you know, cool, whatever. And so how do you decide where to draw them, right? There's also a diagonal here. Is it meaningful? Does it do anything? Is this a thing? Like, maybe, yeah, sure, but like, is it consistent? Can I draw this over and over again in the same manner? Like, there's no, right, the subjectivity of it. So why not approach drawing diagonals the same way you distinguish between having a trading strategy versus doing technical analysis, right? Doing technical analysis is not having a strategy. A strategy is based on rules, a system, right? If this, then that, right? So let's apply the same logic to actually drawing on the chart instead of just eyeballing a random channel between 2 points, right? Yeah, sure, you can eyeball this, but why not create a system that tells you this is how I draw it every single time the same exact way, right? So then you remove the bias from your system, basically, right? So let's make a rule set for how we do that, right? This is the rule set that I use. A simple systemic rules-based approach, right? So this is what I just covered. Rule number 1. Don't eyeball it, have rules, apply the same reasoning for distinguishing a trading strategy from technical analysis. Rule number 2, only use symmetrically opposed values, right? So what does it mean? 0.625, boop, right? And 0.375, which are the which are 1/8 of a range, right? If you add those, it equals to 1, right? The same goes for your golden ratio. 618 and 382, if you add them up together, it's 1, right? 0.25, 0.75 adds up to 1, right? They're symmetrical. What does that mean? It means that if you have them on your Fib tool, right? Let's give these a red color so we can distinguish them, right? So these are your 1/8 of a range above the mid-range and below the mid-range, or sorry, vice versa, but yeah, right? And let's give these the typical golden color. There we go. You can see that these are pretty much the same level, right? This is also something that I tried to cover with saying that these decimal points, they don't really matter all that much, right? I rather use the exact 1/8 of a range than some fucking weirdo random Fibonacci number that's supposedly like magical number that just applies to markets. It doesn't. What you're looking at is these two numbers, right? It's 1/8 of a range. That's what you're looking at. These numbers are irrelevant. But anyway, it doesn't matter, right? Because if you now take this option here, where is it? Reverse, right? If we reverse this, so it's gonna flip this point here and this point there, right? You can see 100 is above, 0 is below, right? If we reverse it, now 100 is below, 0 is above, but these lines don't change. Why? Because they're symmetrically opposed, right? You can do this with any number, like 0.7 and 0.3. They add up to 1 together, right? If we reverse it, it doesn't matter. The lines don't change, right? They're the same lines, right? Hope that makes sense. Right? That's what I mean by using symmetrically opposed numbers. Rule number 3. Right? So if you do this, it doesn't matter which way you draw the range. If you draw it from top to bottom or from bottom to top, right? The lines are always going to be the same. I have created the habit of always drawing them top to bottom, right? And this is to avoid having to deal with negative inverted values, right? And you always have the higher values and the positive values at the top and the lower and the negative values at the bottom, right? Just for clarity and consistency, right? So I don't have to draw this in one direction when I'm looking at an uptrend and draw this in the other direction when it's a downtrend, right? If this is an uptrend and I draw it from top to bottom, I don't know how you guys do it, or it's the other way around, right? I don't care, right? I could do it this way too, right? But if I then go into the settings, I have to remember that it's actually upside down. So if I want to add the 1.5, is now, oh no, fuck, the 1.5 is now down here because I drew it the other way around. So now I have to flip it. Right, and now the 1.5 actually lines up where I want it, which is here, right? All the positive values go here, all the negative values, if you want the opposite of this one, it's minus 1.5, right? And the negative values are underneath, right? Makes, at least in my brain, it makes more logical sense than drawing these things upside down for some reason. All right, rule number 4. Always use anchor points that constitute a completed move. Right? And we apply that same logic to all the time frames. What do I mean by that? Right. So if we zoom out, right, what we see here is a giant bull run, right? This is the low down here. It goes all the way up and then all the way down. Right? We now have a completed move, right? We have a completed bull market and bear market, right? So now we have anchor points. But the same is true for this smaller range down here, right? Even though this is not the complete bull run, we draw from top to bottom, right? There we go. Right? This is a completed move, right? It's an up run with a completed pullback, which then turns into the next leg up, right? Now you're already starting to notice, hopefully, that on linear, the pullback is the exact, but literally to the sat retouch of the 50% line. If we then activate this to put this on log, we can't because we're on linear, so we have to first put it on log. There we go. Right? Notice how this 50% line is still consistently here. See? If we now turn the fib into log scale, right, so that it adjusts the levels based on log versus linear, I lose that line, right? I know from my studies that if there's a completed move, the deepest retest that 95% of the time happens before the next leg up is the 50. Always, consistently. There is no guessing, right? But if I switch this to log, it disappears. It's not there. I have to find it with some other level, like, what is this going to be? Like the 75 probably. No, not even. See, not even the 75 lines up. It's some other weird fucking number, right? Meanwhile, linear gives you the perfect entry, right? And you can extend this idea as to if the market is fractal, which it is, and it's fractal on the linear scale, not on the logarithmic scale, I know that this initial impulse and retracement basically pretty much dictates the fractal nature of the bigger move that's to come, right? Now, what we can do is we can just add levels. Let's hide these for a sec, right? So 200%, right? This is a 1-to-1. So this range, let me just show you on the chart, right? This is the same distance as this, right? 1-to-1s, which also is another reason why I don't use log, because you can't do that trick here, right? It doesn't work as well, because the more the chart kind of distorts as you, the higher you go and the bigger the move, like these start to like not line up properly anymore. On linear, they always line up perfectly, right? So we can just add these numbers here. Let's keep going. 3, 4, 5, and 6. Right? So what we can see here, right, is that this move basically gives you ranges exponentially upwards that are multiples of this initial impulse that give you levels of interest, right? Now, yes, it wicks through a couple of times, but it's obviously the level of importance, because you can see it rejects here, 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 and here multiple times, right? you knew this level all the way back here, right? You can draw this level in after this move here happens, right? So not only if you fib this on linear, does it give you the exact entry point for your where the retracement is most likely to happen, which is the 50% of this linear range, not the logarithmic range. It also gives you all the targets that you could possibly need upwards, right? For the next move that's to come. Where does this retrace to? To the previous one, right? If this is a range, and this is a range, and this is a range, you're now trading in this range. It's logical that if a retracement happens, it goes to the low of this range, and then tests the high of the range, and then high again, rejects, 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 come back down here, blah, blah, and so on, and so on, and so on, right? And once it fails, it goes down to the next one, right? You all know this from just fibbing this entire move. You don't need to place fibs on impulses and do all this kind of weird shit of like figuring out the 618, and if you're pulling it from here, or from here, or from the actual low of this, of like, I don't care. I pull this fib, that's it, I'm done. And I can add all the levels that I want, right? I can add all the midpoints of this if I need to, and so on, right? But always halves, quarters, 1/8s, 1/16s, that's all you need, right? But usually what I do is once this move is actually completed, right? We have now a new completed move, which is the new high here, right? There you go. And then add the 25, 75. We don't need these anymore. And then the quarters. There you go. Right? So after an impulse, the most likely point of retest, where is it? The 50% line. Now, in this case, it doesn't hit it perfectly, but most times it actually does. Right? What is it, the 1/8 of a range, the 625, or your 618 basically, right? Let me just activate and show you where they are, right? It's fucking right underneath there. It's literally the same level, right? That's why I don't use these anymore, because I don't need them, right? Right, so you can see it come down to the 50. This is also the initial bounce here, right? Comes up. This is the midpoint. Let me just add it for those that don't believe me. There you go. And then let me also add this one since I'm at it. Right? Look how perfect. Retest of the 50. Retest of the 1/8 of the top of the range. Right? Rejection, rejection. You can actually see a whole kind of range building here. Right? In between these two, which then finally rejects. Right? Where does it go to? Back to the 50. It then retests the quarter. Right, starts falling below the 50, tries to reclaim it, rejects again, and where does it come down to? All the way to the 25%, right? So it goes from 75, which is the rejection point here. Fuck. Better color. I was not prepared today. Purple, it works. Give me an arrow. There we go, right? It rejects on the 75 here. And it goes to the 25 here, right? Why? Because this distance is the same as this distance. See, everything is a one-to-one move of some point of the range, right? The only thing you need to figure out if it's a one-to-one from the 50 or from the 75% or so on and so on and so on, right? So a completed move, right, from here to there gives you this fib range, which then can literally predict you the entire way down of the bear market, right? And like most bear markets, it's usually around 75 to 85% retrace, right? 100% minus 75 is 25. So you already know that the bear market is going to be here in this area somewhere, right? It's either going to bounce like it did, like so, or it's going to deviate below. Maybe it touches the midpoint between the two, right? And then reclaims and goes, but it's going to be here somewhere, right? Right, let me delete these. And this one too, right? And then once the bear market is complete, what we can do is we can readjust this fib range to the new completed move, right? This is a completed move downwards, right? We now have a low. which then gives you the range for the uptrend that is to come, right? As you can see, after finding the low, the first point of contest is the 1/8, right? It's now in a range in the lower eighth of the range, right? When it finally breaks through, where does it go? Instantly goes to the next one, right? 1/8 of the range, which in this case is the famous 25% again, right? As a bit of a consolidation, where does it go to? The 50%, right? 50%. Where does it come down to? It comes down 1/8, right? Retest. This is your 382 Fib, whatever. Works the same way, right? Boom, boom. Deviation below the range, retest, off it goes. Where does it go? 1 to 1 from this to this, exactly to the fucking Satoshi cent right there, right? Boom, where does it come? 1 to 1 back down again, right? And now we're here back at the 50 again, right? If we switch this to log, it still kind of works, but I just prefer the consistency of linear. Linear is just move 100%, 50, retest of 75, back to 25, back to the 50, reclaim the 50, retest 75, retest 50, and so on and so on and so on, right? It's the same picture over and over and over again. It's very simple to understand. There's no complication magic to it, right? Down to the 50, up to the 75, right? And usually what it does is just it goes from here straight to the 25, then retest the 50, and then kind of creates the low, then reclaim the 25, retest 50, kind of do this, and then up to the 75 again, at which point you're back into a bullish trend, right? It's kind of the same picture. If you do this like on many charts, you'll see it over and over and over and over and over again. But you have to do it on linear, not on log, because on log it just looks weird, right? And log is just the exponential representation of the quadruple extension of the initial linear move, right? It's nothing else, right? I just prefer the consistency of linear. Right, what else? Let's see. Yeah, so the time frames, right? So this idea of using completed moves, we use it on any time frame, right? So on the daily, right? Let's say this is the low. Right, this is a completed move, right? It's an up thrust and then a retracement that turns into another, right? So we have 3 points of reference now. So we anchor it at the low, we then anchor it at this low, and then hit it up here, right? This is a completed move. Let me switch this to the other style, solid. There we go. Give me the 50. A completed move. You can do this on the 1 hour too. Find a good one. Just to kind of, I mean, this kind of works. Right? We can do the same here. So we have a low, which is basically what I just showed you, but on a, right? We have an up thrust. In this case, it's quite vertical, but still, right? But I would, given that this is a higher high than this before the actual retracement happens, that's why I would actually use this one here, right? Because this point here is higher than here, right? So then I take this low and then line it up like so. At the highest point of the move. Right? This is a complete move from the low here to the high there to the low there, right? We now have a higher low compared to a lower low with a higher high compared to this, right? On linear, it gives you a very nice channel, right? We just rejected the top of the channel here, right? But you can see the 50 lines up perfectly, nicely. The 1/16 of the top and the bottom of the range is a nice area of interest, of where you usually see like little distribution patterns and inverted head and shoulders, you know, UTADs, that kind of stuff usually happens in that 1/16 of the range high or low, right? Rejection of the 50 and up to the mid range again. Let's see how it looks on log. It looks almost the same, right? Because why? Because the tool stays anchored where it's supposed to be, not fucking shifting around like the channel do, Yeah. So I hope the completed move things make sense, right? So we only use completed moves whether we're on the 1 hour chart, or we're on the daily chart, or on the weekly chart. So if we're charting this, right, you could say that, you know, this was basically the thing we drew before, right? What happens if we attach it here? Because this is actually technically the pure bottom. Yeah, it kind of works, I guess. But yeah, see, so it's just the same logic over and over. Okay, let's move on, because otherwise it's going to get too long. What else? Rule number 5. So apply the same anchor points principle to low time frame, high time frame. That's what I kind of just talked about. Even if when a high time frame channel line cuts through some of the early PA, right? The important part is the anchor point systemic approach. It removes personal bias when simply eyeballing diagonals. Let's see if I can actually find one for you. Was it BTC on the weekly? Yes. I think that was the one I was debating with a buddy the other day. So we're on BTC USD on the weekly, and the way I would draw my diagonal line or channel is I go here, right? Let's say we're here. This is the PA we're looking at, right? So I would take this low. I would then take this low when this move starts to happen, right? And then attach it here. Right? I'm gonna ignore COVID because it was an anomaly, right? So it cuts through the PA, right? But look how it cuts through the PA here as well, right? That is because I'm looking at a bigger move. I'm looking at this move, right? I'm not looking at this area here, right? So I don't care about this anymore. This already happened, right? This is on a lower time frame. We can actually just go there to show you, right? On a lower time frame, let's go to the daily, right? This is just like a range, and there's also a diagonal here, right? We can use this diagonal, for example, right? This is a completed move, right? It's an up thrust with a retest and then a move away from that low, right? We have a higher low compared to a lower low with a high here, right? And we're outside this channel now. So this PA, I don't care about it anymore, right? Because we're now dealing with a bigger fractal of this range, essentially, right? So I just let this play out. Weekly. Go, 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 go. Right? I'm now dealing with a much bigger fractal. So once this fractal completes, right? And here you can see the COVID bottom happens exactly in this initial, the very first initial fractal determines where the bottom of COVID was, right? If we now apply the same logic, right? This is the high, this is the ultimate low, like the very purest low, purest high. We take this one because we ignore COVID because it was an anomaly, right? This wasn't supposed to happen, right? Look where the bottom comes in. The bottom of the next cycle is the exact bottom of the channel of this initial fractal that started that started the whole bull run. This is not coincidence, right? And this, you can only see this on linear, because if you go to log, it's up here, which is not bad. Like, this is a good channel in my opinion. Like, it clearly defines the head and shoulders like perfectly, right? The retest of this is just perfect, right? Retest of the 50 with a deviation, retest 50 again, comes back to, like, it's a good channel, right? But it doesn't predict the bottom, right? All right, what else? Right, rule number 6. For downtrend channels, always use 2 highs and 1 low. Prioritize having the top line be the most accurate because it determines if the trend is still intact, right? And then rule 7, which is the inverted one of this one, for an uptrend channel, always use 2 lows and 1 high. Prioritize the bottom line to be the most accurate because it determines if the trend is still intact, right? What do I mean? Well, if the assumption is that we're in this channel, right, then the bottom line is the most important one, right? Because once this line actually like breaks down and rejects, and that means that this uptrend is broken, and now you're probably into a downtrend, right? Here, boom, there you go. Right, so I prioritized this line over this line, right? Because it's an uptrend, and then for downtrends, it's in the opposite way, right? So that is why the channel tool or the Fib tool, Fib channel tool, I always, if I'm drawing an uptrend, I take the lows and then adjust it to the high, right? Because this line is the one that's important to me, right? Because eventually, most of the time, let me just draw this here in a empty space. If you have an uptrend, usually what happens is trend is up, right? Until it's not, right? Eventually it's gonna turn somewhere, and then it's gonna break out of the downside of that trend, right? And if you draw this the other way around, right? A downtrend is in a channel until it's not, right? So that is why in a downtrend, the top part of the channel is important, and in an uptrend, the bottom part of the channel is important, right? And we can kind of just show you, right? So there's essentially two ways of, let me just get back to linear, there we go, because I just enjoy linear. You could draw this in two ways, basically, right? You could say, I'm gonna unite these two and then do this, right? Which is not bad. But like I said, this is, you're trying to track a downtrend. So what I always do, just for consistency purposes, because it's a system, it's based on rules, I always draw the top first and then take the low, right? And then for an uptrend, let's say I want to track this uptrend, right? I take the lows first and then I tag the high, right? Now I have an uptrend channel, and you can see how perfectly the 50 lines up here, right? On linear, not on log, right? What I'm not gonna do is do this, right? If I'm tracking an uptrend, I'm not gonna take this high and then this high and then adjust this to the low, right? Just for consistency purposes, or maybe you wanna do it from this high, I don't know, it looks weird to me, right? It just doesn't make any sense, right? I need this line to be consistent, not the top one in an uptrend, right? All right, that pretty much covers it, I think. 40 minutes. Ooh, all right, time to wrap it up then. Yeah, so basically I adhere to these rules and take advantage of the fractal nature of the market, right? And then by creating a standard version of the Fib settings, like I showed you, and how you can predict the whole fractal upwards by just multiplying the range over and over and over again, you effectively duplicate the range or channel into stacks until the higher time frame move is finally revealed or completed, right? This is basically what I showed you here. So I can just do another example of this to finish up the video, right? So this time we're on BTC instead of Sol USD, right? And now what we're gonna do is we're just gonna multiply this range, right? So double the range, quadruple the range, 6 times the range. There you go, there you have the top, right? Exactly, no guessing, no nothing, right? You can add the midpoints if you want, right? You can move this around, right? It's skipping because I didn't use the 3 and the 5, right? So if I use this, then, right, this is the midpoint between each of the ranges, right? And you can see that the first stop was exactly a rejection of the midpoint between the 5th and the 6th expansion, right? 5.5. That's based off the first impulse of the low, right? And you can do the same with the channel tool, right? So if we take the channel tool, I already have it prepared here, hopefully. We're gonna do dashed extended. Let me just zoom in so I can actually target these. Right, so we're gonna do an uptrend. we're expecting an uptrend from this low. So I'm going to take this low, connect it to the lowest point after the first impulse up, which is here. We ignore COVID. And just, there we go. I think I also have to draw the other one, because otherwise you're not going to see. Dashed here. Right, so we do the same, just the same anchor points again. Right, this is the range. There we go. Now we have the, we add the solid one so we can actually see. There we go. There we go. And then also the solid extended one. There we go. And there we go. You can basically do this with 2 fibs, but I just have them preferred, like saved in style, so I'm not gonna like edit all the levels and whatever. Right? But basically you can do this with 2 tools, right? And you extend them both sides, right? Again, look where the top comes in, right? What level is this? 6, right? It's this one. Okay, the red one. Let me make it thick so you can see. Okay. The high of this cycle is a 6th multiple of the linear range of the first impulse. Does that make sense? Right? And look how perfectly all these levels line up. Right? And then once this bull run is completed, this is a completed move, which is a bigger fractal of this fractal, and then you can adjust your range accordingly to the next, if you want to have the full big range of the full thing, right? And then where does the low come in? The low comes in right exactly at that channel again, right? If we switch this to log, all you have is this, right? But yeah, it gives you a nice channel in terms of like, oh, look at this beautiful 50 here. Yeah, amazing, right? If you switch this to linear with all the extension, you have all the levels you could possibly dream of, right? And you can do this with 2 fibs, right? Like I said, the only reason I already have these prepared, so that's why I used 4 this time, right? Yeah, so pretty much that's it. That's how I use channel tools, Fib tools, linear mostly. I pretty much skip logarithmic at this stage. Like I don't need it. Linear is way more accurate in my opinion. Yeah, if you want to screenshot this or go to the beginning of the video before I paint it all over it, you can take a screenshot and kind of like as a reminder if you want. And as a final note, let me just remove all this. There we go. Yeah, so indicators, everything that I built is also based on linear, right? So if we activate the rangefinder, it's gonna highlight the last 3 ranges that it's found on linear, right? And as you can see, we have an impulse. That impulse comes down to the 75%, holds it, doesn't even come down to the 50, which is a clear indication that it's very bullish, and then immediately projects upwards. Where does it hit? So this is the, let's see, this is the range. And this is the 200%, this is the 250, right? So it extends 2.5 exactly. Let me just highlight that level for you, because there you go, right? I'm gonna take this line, look where it topped, right? It's a linear extension. It's not a logarithmic extension, right? It's just a linear extension from this impulse, basically, right? And then again, what does it do? It comes down here to the 75% range, rejects the 1/16th, comes back down again, and so on, and so on, and so on, and so on, right? And this adjusts on any time frame, right? So on the 4-hour, it selects different ranges. There you go, right? Here you have it again, right? Up thrust to the 50, to the 75, to the 50, rejects the 1/16th, comes back down to the mid-range, up to the 75, to the 25, flips the mid-range back to 75. And it's just super, super consistent, right? And this indicator pretty much lines it all out for you automatically, right? And this is just from this impulse alone, right? And because the impulses are fractal on a linear basis, it doesn't really matter that much where you line up the linear range, because it's all quarters and halves and 8s and 16s and so on and so on and so on. Right? You don't need all the fancy Fibonacci numbers and fucking weird numbers of, you know, Chinese lucky 088 and 7.06 and like fuck all that shit. All you need is like half, quarters, 8s, and 16s. End of story. You really don't need anything else. And the market will just respect it like with precision. Right. Yeah, to wrap things up, I'll put a link into the description of the video that will give you, that will bring you here to this indicator, the SG Quant. SG stands for Sacred Geometry Quant Indicator. This is the newest version. I will be making new videos about that soon. And there's a little link here to my Discord in the description of this indicator. You can pick it up for free, right? Yeah, so if you are interested, come hang out in the Discord, and then we can talk about this stuff more, right? That's gonna be it for me. 50 minutes, I'm gonna sign off, and hopefully you've learned something or found it interesting. See ya.